friends, this is Raman Gill with your weekly Forex market analysis for the week of February 27th, 2016. Just a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. Do not put the money in your live account that you cannot afford to lose. And if you have questions about your individual investing needs, I recommend you talk to your investment advisor. So we will take a look at our economic news to begin with. Then we will go into commitment of traders data to understand how the bigger players in the market are positioned. And finally, we'll take a look at our charts. Looking at the Forex Factory calendar here, today we had core durable goods orders come out in the New York session, and which was the number was negative, and we also had pending home sales number which was negative here as well. So this week we have a lot of data coming out. Not just that, we have a lot of underlying political risk right now in the market which can make things very volatile, so watch out this week. We also have month end, which tends to make things volatile as the bigger players are closing out their orders and taking profit, which results in these some exaggerated moves which you would normally not see in the market. So be careful about that as well. And going into Tuesday here, the biggest thing that we have to watch out for is President Trump speaking in front of the Congress. So the market has been watching for or looking out for President Trump's plan as to the big tax reforms that he has been talking about, and also what other things he's doing to boost up the economy. We haven't seen anything concrete come out of the new administration yet, so the markets have been waiting on hold to see what happens with that. So the speech to the Congress will be really heavily watched, and market will be paying a lot of attention to that, which means it can create a lot of volatility in the market at that time. So be very careful trading tomorrow. And leading up to that, we also have preliminary GDP numbers and consumer confidence number, as well as the PMI numbers for the US dollar coming out. And then we also have political risk because of the French election coming up, which has been weighing heavily on the euro. Also, for British pound coming up in March here, Prime Minister Theresa May is supposed to trigger the Article 50, which will then start the process for Brexit. So that's on the cards as well. We also have Scotland now talking about a potential exit out of the break away from the UK. So all of that could weigh heavily on the British pound. So keep an eye on that as well. Going into Wednesday here, we have a lot of PMI numbers out of the Eurozone. PMI numbers are leading indicators, which then translate into retail sales and GDP numbers. So these leading numbers normally have an impact on how the markets move. So watch out for that. Same, we have manufacturing PMI numbers for the British pound as well. Going into the US session here, we have Bank of Canada rate statement and overnight rate here for Canadian dollar. It is not expected to change. However, the statement from Bank of Canada will have an impact on the market. So depending on what their view is on the market, that will drive the Canadian dollar price and as well as the dollar CAD prices. And then we have PMI numbers for US dollar as well as the crude oil inventories on Wednesday. Going into Thursday here, we have construction PMI numbers out of the British pound, and then CPI and core CPI numbers. This core CPI number is the number that the Fed watches very closely. So this is the inflation number. If the inflation is on target, it's increasing, that is positive, and which will mean that the Fed will be more likely to raise interest rates. So this is why this number is very important. Even though it's not red news, it is an important number that the Fed watches. And then further down, we have Canadian GDP number as well as unemployment numbers for the US dollar. And then on Friday, big day here for the US dollar again, because not only do we have ISM non-manufacturing PMI numbers, we have a lot of speakers from Fed, these FOMC members speaking, as well as Fed Chair Yellen speaking. All of this is expected to create volatility in the market. So this week, the entire week, we have multiple times we have Fed members speaking, and they've been talking about potentially raising interest rates for the US. As a result, we could see volatility in the US dollar. Let's move on to the commitment of traders data. So COT data tells us how the bigger players are positioned in the market. We're looking for this leverage money position. So this is Euro US dollar here. As we can see, this green line has been going down, which means the short positions are increasing for the big hedge funds and leverage money accounts. This shows that euro is under pressure, and this is bearish for the euro US dollar. Looking at British pound here, we see that the green line has been going up slightly, but not a big change here. We see the red line, which is the asset managers. These are pension funds, long-term traders, the big money here. These seem to be going down a bit, and our leveraged money has changed slightly. The short positions have decreased slightly, but overall the net change is very flat at the moment. So this is neutral from COT perspective. For Canadian dollar here, we see that this green line has been going up for quite some time here, and now it has flattened out slightly. So we went from 19,900 long positions to 23,831. So it is still going up, but not as sharp a rate as it was going up earlier, which means this is positive for the Canadian dollar, and as a result, this is negative for dollar CAD. So dollar CAD, we are looking at a potential down move. Aussie US dollar here, we see that leverage money positions are going up. Now they're coming to a bit of an extreme here. We haven't seen this kind of long positions for some time here. We are going into this is the last time we saw these long positions sometime last year, and now we are back into those highs in terms of the long positions. They're not increasing quite as much as they were before. We do see an increase from 40,000 to 45,742 in terms of the long positions, which means that this is positive for Aussie US dollar. Looking at New Zealand US dollar here, we see that the long positions have grown. However, they are at the extremes here as well. We haven't seen this many long positions for quite some time here. This is back here in 2014 is when we saw the same level of long positions, and they've actually gone through that number now. So at this point, we have gone from 30,000 long positions to about 30,822. So not a big increase. As we can see from the chart here, New Zealand dollar hasn't really gone up very much. It's even though the long positions have been increasing now, it's coming to a bit of a resistance at top. Same thing for the Australian dollar here. Even though the long positions are increasing, we aren't seeing the similar move in the price for Australian dollar, which means that even though this looks positive, we could see the market correct itself. So watch out for that. Let's take a look at the charts here. This is Euro US dollar weekly chart. As we can see, for the last 2 weeks, Euro has been stuck in this range with the high of 106.80 and the low of 105.00 here. Last week, price did try to break through this. However, it has pulled back up since then. So now we're looking for this range to break. If it does break below 105.00, the next level we are looking for is the low here, which is a 103.60 level or slightly lower. However, if the price goes to the top of the range and for some reason breaks to the upside, we could see a potential of 108.20. However, I am more bearish on this. The only reason we may see a big jump could be from Donald Trump's comments. So we do need to be careful here. Even though I am bearish on Euro US dollar, we could see volatility in the market that could push it up higher here because the range isn't really that big. It could blow through that quite easily. Looking at the daily chart here, this is the range that we are sitting in. We have stayed within this for quite some time. And now we did come and test the lows here at 10500. Once these lows break, we are looking for a move to the downside here into 103.60 or 50 area. So overall, I'm bearish on euro US dollar. Looking at the pound dollar here, we have stayed in this range for last 3 weeks, and the range is 125.80 to 123.50 area. So that's the range we have been in for 3 weeks now. At this point, we are looking for price to come out of this range, and that's where for to the downside, our target would be 1.2080. And if it breaks to the upside, we could see the price go into 127 or even potentially into 12800 level. However, at this point, price does look a little bearish, so I would be looking for the price to come and test the lows here at 123.36 area here, 123.50 area. If it breaks the 123.50 area, we are looking for this move to the downside into 120.80 area for the British pound. This is dollar CAD. Again, same story. We see the price stuck in this range for some time now, 132.20 area to the upside and 130 to the downside. Price has been going back and forth in this range. At this point, again, we are looking for a break of the range, whether that comes to the downside or to the upside. So the lower target here would be 128.20, and the target to the upside is 133.80. So if the price breaks above 132.20, we're looking for price to go to 133.80, and if it breaks below 130, we're looking for it to come into this support and resistance area right here, which is 128.20. Looking at the daily chart here, we see that it has been pushing up a bit here, and we have a bit of a trend line going. So now if it holds this trend line and stays above, we are looking for the price to push through the high here, 132.20. If it goes above this, this is strong resistance. If it does manage to go above, this is the next target, 133.80. But if it does come down towards the bottom here, which could happen, we do have Bank of Canada rate decision, as well as Donald Trump speaking. So both of those factors could create volatility in this market, and price could move. So we'd be watching for both of these levels to see if the price will break out of the range. Aussie US dollar here for the last 3 or almost 4 weeks here, price has been stuck in this range again. So a lot of these markets are range bound at the moment, and we haven't really seen enough stimulus for the ranges to break. However, Aussie is showing a bit of a compressed move, which means it can be bearish for Aussie. So here we have 76.36 or 50 area to the upside, top of the range, and then 7600 the bottom of the range. Now we're looking for price to break out of this range. If it breaks to the upside, if it goes above 7750 area, the next target would be 7850 area here, top of the pin here. And if it breaks below 7600, then we are looking at 7520 as the first target, and potentially going lower here into 7450 area. Looking at the daily chart here, as you can see, we're seeing this compressed move where even though price has moved higher, it hasn't really done much. And now we have a double top formation here on the daily chart as well. This suggests that price is likely to move down, at least come back to test the bottom of the range at 7600. And if it does break lower, then our next target would be right here, 7500 area, and then below that into 7450 area, which is this previous support and resistance. So those are the two targets to the downside. Overall, based on the daily here, it does look like it wants to roll over. New Zealand US dollar here, this one has dropped prior to Aussie here, and now for the last 2 weeks it has given us completely neutral candles, and it's sitting in this very tight range between 72.80 and 71.40 to the downside here. Now again, we are looking for range price to break out of the range here. The next target to the downside is 70.30 area here, and below that we could see price come into 69.50 area. So those will be the two targets to the downside. If for some reason it does break above the top of the range here, 72.80, the next target is 73.80, and then above that we could likely go test the high, which is 74.80. And looking at the daily chart here, we do see this big price drop, and then price has consolidated in this range. Now it hasn't broken above, which suggests that it is likely to go to the downside. So we have seen first drop, then consolidation, and we're likely to see another drop here. However, because of the speech by President Trump and other factors that will impact US dollar prices, we do need to be careful of the volatility in the US dollar itself, and as a result watch out for that, not get too biased. Overall, I am looking for the downside, but just be careful. So if the price breaks below 71.40 or 30 area here, we are likely to see it come down lower. The first target would be 70.30, and then we are looking into the 69.80 area. So that's it for now. I will see you next time. Have a great trading week.